Joseph, if we turn to investors who may want to get exposure to the Chinese market, but they're not necessarily involved in production or export-import, is there an opportunity, and how big is it, to get into, say, the Chinese share market, for example?
Right. Well, using portfolio investment is another way to participate with the growth of the China market or the China economy. In fact, there are two Chinese stock exchanges, one in Shanghai and one in Shenzhen. And however, there are two types of shares. And the A shares are available only to domestic investors. And however, you can buy B shares in the Shanghai and Shenzhen exchange. However, the B shares are relatively thin in trading. And well, if you think about, well, can we use Hong Kong as a stepping stone for portfolio investment? Yes, indeed. Well, because well, China actually allowed the enterprise to list in Hong Kong. And so when the China enterprises list in Hong Kong, we call them the H shares. They are still state-owned enterprises. And they may also list their shares in New York. They call N shares and S shares in Singapore. However, the H share market is large, even compared to the entire Hong Kong market. And the China enterprises also list their red chips in Hong Kong. The red chips are listed in Hong Kong, and the majority shareholders are also the China state. And so these two are the major kinds of shares that you can invest with the Chinese economy. However, how about the A share? The foreign investors are not allowed to trade in the A share market. However, there are ETF trade on the Hong Kong exchange, and we call them the I share. That mirrors the performance of China's A share. But the I shares are synthetics. That means the underlying asset of the I share are not actual physical shares. The investment banks actually use derivatives to mimic the performance of A share market. And there's another channel, that is the foreign investors are actually allowed to accumulate A shares through two different programs. One is the QFII program, that is the Qualified Foreign Institutional Investors Program. And the new RQFII program. RQFII stands for Renminbi Qualified Foreign Institutional Investors Scheme. And the latter is a new scheme, and the creation of that is due to the fact that there are quite a large amount of offshore renminbi accumulated in Hong Kong. It's actually, I'm pleased to share with you, as according to statistics, we actually have an increase in foreign investment flow into Hong Kong in last year. And the increase amounted to about 35%. And so that is an encouraging sign. And by the way, the Hong Kong market has been ranked among the largest equity market in the world.
Joseph, if we're talking about opportunities for Australian companies, would you like to perhaps identify some areas where you think there is opportunity for Australian companies in the Chinese market?
Well, should I say that the first impression I have about Australia is it has a big desert. And the China government is trying to make the growth among different provinces more equal to each other. And so that's what we call the more equitable growth model. And they're trying to develop the western part of China. And where you got pasture, you also have more arid region. And so the Chinese government is actually injecting more capital to develop these areas. And so they will welcome industries just like agricultural, cattle farming, or sheep raising. And recent days they are doing winemaking in this part of the new growth region. And so Australian companies have good experience in winemaking, and you may have a very good prospect establishing the business in China.